Welcome to The Finance Story, a leading digital media and career insight platform. I'm your host, CA Vyoma Rao, and today we are interviewing a chartered accountant who is a co-founder of a fintech startup and has an experience in portfolio management for more than a decade. Please help me welcome CA Ashish Goyal. How are you, sir?
I am good. Thank you, Mama, for this conversation.
Great. We want to know everything about you in terms of how you got into the fintech startup space. But before we get there, just tell us a little bit about your background, that how you got into the finance space and why CA.
So I think finance was always a calling because physics, chemistry, and biology was not my cup of tea. Never able to figure out the anions, cations, and all those integrations, differentiations in early my life. So I realized that accountant and the CA looks to be my field. And also coming in from a very strong mathematical background, I always had an interest in accounting or you can say financial services as a sector where I thought that that's where I can be really making some impact uh, overall to my career as well as to the society at large. So just to give you a little history about myself, I passed out CA in 2001. Before that, I did my industrial training with Citibank in Bombay. Then I joined Bajaj Allianz. It was a sunrise industry. At that point in time, insurance was just opening up. I thought that maybe there would be a lot to learn. And I ended up in Pune at Bajaj Allianz. First 100 employees. So really learned a lot. Almost worked in all the fields related to business out there. In 2006, I decided to choose investment as my core field and managed the investments there for almost close to 9 years. Quite a few of those times as a chief investment officer for Bajaj Allianz General Insurance, but had a good experience and had a really deep involvement in many strategic discussions also at the group. In 2015, me and my co-founder Akshay, we were always looking out for an idea that what can we make what can we start with. There were 2-3 core elements which we were always looking in an idea. The one, it should be consumer focused, because we believe that if you want to build something, it has to make a difference to an individual, not to a business. So we never wanted to do a B2B business. We always wanted to do a B2C business. Second, it has to be in financial services, because both of us spent our careers in financial services. And third, it has to be a big idea, because if we were getting out of our comfort zone and starting something, not because of money, but the impact which you are looking for was supposed, we always kept it that if it's not a big idea, we should not do it. Yeah, we should do it only if it's a big idea. And what we do at EarlySalary, and just for viewers, we are just going through a name change. We just announced it today. So now we are known as Fibe, Fibe, which is a word mixture of finance plus vibes. So we want to create a positive vibes in the consumer's life. And so EarlySalary we started, and it was ticking up all the boxes we wanted to build. And we said that let's try to build this piece. And we ticked off. We spent a lot of time figuring out the various aspects of the businesses before we started. So that was quite a good homework we did before we actually quit our jobs and started it.
Excellent. And for every startup, I've heard this, that there's a lot of work that goes before the launch date. And I'll come to that a little in a little while. My question to you is that, your corporate career was you were doing great in that. Your corporate career was going well, and then you quit after almost 14 odd years to create something like EarlySalary, or now called Fibe. So what was that made you so confident about this decision?
I think if I would say that I was super confident, I would be lying. Like any big decisions in life, there will be always an anxieties. We had our own anxieties, but both of us were very clear on few things. One is that we would like to try. Second, we always believe that while the businesses at the end of the day are small steps at a point in time. So if today we always take one steps at a time, so we will able to figure out life. It should not be a that big challenge. Third is that we knew that there is a large market opportunities which we can tap. Having said that, at that point in time, the way the financial or the venture capitalist available today to really fund the business ideas, it was quite muted in 2015, 7 years back when we started. But we had a belief that this is something which we can do. This is something where my and Akshay's both capabilities are there to really make it a success story. So we were pretty confident in our idea, saying that we will able to execute this to an extent. And of course, there is always a thing saying that you should, if there is an idea in your mind, you should execute it. And that is something became much more clearer to us as I started building this company. Today, I would jump into anything and do it instead of just thinking that whether I should do it or not. Zero regret policy, what I call myself now, saying that if the failure is okay, success is okay, not able to meet the targets is okay, but not doing is not an okay. If I want to do it, I should do it.
Absolutely, you said that made sense to me that inaction is the biggest risk. I also wanted to ask you that while you were having the discussions with Akshay, your co-founder, what kind of discussions were they? Was it for creating a minimum viable product, or whether to understand whether this is a scalable option in terms of a business area? What kind of procedure or what kind of process did you follow when discussing things with Akshay?
I think in my mind, there is no process out there. Many of those things are intuitive. Uh, and many of those things you just have a belief. I think if you spend too much time, you will not able to build it. So we had an idea. We thought that there is a way to execute it, and we spent more time in really started ensuring that how to implement it, then whether to figure out whether we should implement it or not, or whether we should quit our jobs. So I think those were the list of the worries, whether it will succeed or not. What more time we spent in really figuring out that how much tech we need, what kind of uh, business model we should build it, what could be our first go-to-market strategies, whether we should be starting with a mobile app or a website, or whether we should be offering what kind of products. So we spend a lot of time really building those ideas, building out how we are going to really get an access to the funds. So we did look at all the pillars of the businesses, but it was less about whether we should do it or not.
Excellent. So you mentioned that you had to decide on a lot of things because it is a fintech. You wanted to decide whether it should be on a website or a mobile app. So who takes care of the tech function? Because both of you are big on
So,
finance.
both of us, yes. So both of us are from a qualification perspective are a non-techies. I come from a strong finance background. Akshay come with a very strong marketing angle and the marketing background. But we always believe that if you are running a businesses, what is most critical is that how do you really execute it. At the end of the day, it is like there is a saying that to raise a kid, the entire village is required. So that's the same thing. Even if I would have been a techie, I would have needed other help. So in this case, we reached out. We started building the technology. We started hiring people from the tech perspective, and I think uh, that was the easier part in executing the stuff once you have an idea about how to really go and get the talent. So whether be it analytics, be it products, be it the technology part, and it's again a step at a time. So we kept building, we kept improving. Also, our customers were also quite you can say that forgettable about us, saying that "Ki, let's it's okay that it's a minimum viable product." So we did build a minimum viable product, kept improving. What we have today is a hard work of last 7 years of the entire company. So I would say that that was never a question that whether I would need a technological or the other aspects of the skill sets between me and Akshay. We were aware that we can always, there will be always few things which both of us will not have it, and that's fair. I think when somebody is starting a business, they cannot control, or they cannot have a deep understanding of every aspects of business. Like even today, I would not say that, yeah, there will be many fields which I really don't get into it at a day-to-day basis, or very deeply, because there are people who understand that better than me.
That is so true, and especially being a CA, we are required to know anything and everything about finance, which is not true. Okay, so early salary. Tell us about the early days of early salary, the first few months, how it was to put everything in place and create a product.
So I think it's always a really a cherishing moment to really rethink about that, or it gives always gives a goosebumps. Sometimes uh, those are the, you can say, days which really put the foundation of the company. While it is 7 years, and I still think that we are still very early in our journey. There is a lot to be done. There is a lot to be achieved going forward, but the early days were really, really exciting. We did everything possible. Coming in, especially when you come from a chief investment officer as a title before you starting something, and suddenly you realize that even chai wala you need to get yourself, and from finding a space, from finding negotiating for a computer, or finding a security guard and a tech guy, or a CA to do your audits, or the CS to do your filings. So everything was done hands-on. There means when we started, we were 6 people, uh, two founders, and then a couple of techies which we hired at the first stage. We took a lot of interns to help us in that entire process of building the first piece out. But we did that in a very record time. We started building our mobile application in October of 2015, and we launched our product in February of 2016. And in record 4 months time, we were able to end to end execute our first product, and went into the markets. uh, then as the time progressed, we kept on building analytics team. We are in a business of giving very short term money. We give our ticket sizes can be as low as 5,000 rupees, which means that it has to be highly dependent upon technology as well as the analytical frameworks. And we spent and invested heavily into both these segments. Today, our analytics teams has built the scorecards as well as the other tools and the models which allows us to take decisions in a real time basis. And that is something which we achieved much earlier in our journey. uh, uh, the usual challenges of any early startups, whether it is about the raising the next round of funds, whether it is about ensuring that you get your clients, you keep building your growth momentums, proving the proof of concepts of your early products. Everything has been done, and still today I feel that we are still at the beginning. We keep, means the same energies I see in my team, and I think we are still in that on the day one.
That's fabulous. Coming from you, that it feels like the same level of excitement even after 7 years tells a lot about your team and yourself. I just wanted to ask about the clientele that you had early on, because you said that they were very forgiving. So, in what context did you say that they were forgiving? And tell us about the first few clients and what was the struggle in getting them on board?
I'll tell you a story. So when we are launched our, when I say forgivable, what I meant is adaptable. There is always few customers who are very, very flexible. They are the first. They are the early adapters of the technology. They are early adapters of the new products. There are people who experience the product only once it become very established. So like when Amazon came to India, there will be few people who will order it and take the risk of saying that it might deliver a wrong product. But as it become established, everybody started ordering. So these early adapters are the people who are very, very flexible in their approach. They are always looking out for new things. They are always looking out to learn new things. They are the ones who gives back a lot of feedback also. So like I'll give you an interesting story. So when we launched our product, one of our customer was a technology guy. Um, he called us up. He said that I'm not able to access a particular page on our mobile application. And I think that based on his knowledge, he said that there, you need to go and fix these couple of things in your codes and it should work. But give me my money. There is a lot of feedback came from consumers, and we always kept ourselves open to those feedbacks to ensure that we keep building the products which consumer needs. Like there is a saying that your product ideas are as good as the day you hit the markets. While whatever product ideas which we built, a good amount of those product ideas are still existence. What we are selling today, our core thesis still remains very intact, but the learnings were immense. The kind of product which we should build, the kind of technology stack should be, or the kind of an experience journey which we should provide to the consumers, they have evolved a lot since the day one.
Absolutely. I mean, till 2019 alone, you had more than 2 lakh customers to whom you provided your services. Tell us a little bit about Early Salary. What is exactly Early Salary doing?
Uh, so that's in my mind, or being a founder of the company, I always believe that it is something which uh, is a necessity for the segment of consumers which we service. This is something which is in our mind. We really want to build it just like any other necessity for a young consumer. Uh, what and name is the name suggests, early salary. It is something which is related to providing financial assistance to my consumers. It is something which came with uh, a promise that I will able to provide you faster, better services. You don't need to step out of your home. You can access the loan sitting at home within 10 minutes. That's a promise which we made. And today, if we see, we have evolved a lot. Today, what we stand for is we would like to service every need of a mid-income aspiring individuals. And when I look at this definition, I keep going back and say that when I say mid-income, there is a consumer who earns from 15,000 rupees to 50,000 rupees. Uh, if that customer, let's say somebody earns 20,000 rupees, goes to a bank, chance of he getting a money from a bank is very small. The kind of paperwork, kind of documentation, as well as a bill, the chance of a bank giving money to a 20,000 rupee earning person is very low, because their ability to lend 10,000, 20,000 rupees is not there. They don't, and it's not a question of their ability. Their willingness to give that money is not there, and that's provided us a big canvas to go and make a difference and the impact in the lives of any consumer who earns 20,000 rupees, but they are aspirational in nature. So we really are here to make people's aspiration comes true. Just to give an example, I come from a very small town from Rajasthan, and when I came to Pune for the first time, the city life is quite different than what life I lived at that point in time. It always leads to aspirations. It always leads to ambition, and many a times they are quite interlinked. As you become more aspirational, you also become ambitious, and it creates in my mind, a virtuous cycle. Uh, and if and Can we fulfill that need? If the consumer needs to live today, knowing that he can increase and enhance his income tomorrow, can I be there? Can I be a person who can allow him to live, fulfill his ambitions today? If he wants to travel in Ola instead of traveling into bus, can I provide that kind of a service? Can I be the line of credit which whenever he needs it, be it for a emergency, be it for a cash flow mismatch, be it for uh, some regular payments, can I be there for him, where he will always say that if I have early salary, sab ho jayega. And that is the core concept with which we started, saying that if anybody earns 20,000 rupees, how can I be a financing partner for him? Because the larger institutions are not there. They are keen to provide 2 lakh rupee loan. They are not keen to provide 5,000 rupee loan. Can I be there to provide that kind of services to this set of consumers who are a big set of India. I think it is much bigger than the consumers who earn more than 50,000 rupees. It is the largest set of people in India. Can I provide services which makes them eligible for credits, and which does, and credit does a lot of things, like it gets your credit scores, it allows you to become eligible for larger credit cycles, it allows you to fulfill your ambition, and that is what we uh, started building along with EarlySalary. And that's stand true today also. Our core focus remains to service this mid-income aspiring individuals, provide them every kind of a service. While we started with cash loans, which we call it the money going to the bank, but we also started providing the consumers an ability to use limits at various merchants. We did launch a card for our consumers. We are in a process of relaunching it. But our core thesis is that we would like to offer all kind of products which they can buy. Just take an example. If some one of my customer wants to take an insurance policy, uh, now insurance policies comes for 12 months, but you need to pay upfront for the entire money. Can I convert that into a 6 months EMI? That can really allow him to pay over a period of time, as well as he can buy a larger health cover. Instead of taking a 5 lakh rupee cover, he can take 7.5 lakh rupee cover, and we have seen those kind of successes in our models. So, and every day is I see that there are just a lot of things which we can do with our consumers, and we are on that path.
That's excellent. Converting something which is a lump sum payment into an EMI and making sure that your customers are able to, uh, access a better standard of living is it's a fabulous thinking process behind EarlySalary. Sir, I wanted to ask you, while you were in the process of EarlySalary creating setup for yourself, there were people who mentored you, or it was all you and Akshay from the very get-go?
Again, same thing. Raise a kid, you need a village. Uh, or So I think uh, we were lucky to always reach out to the people. Both of us were never afraid of asking for help. We were very clear that in case, and that is something which we learned much earlier in our careers, because we became uh, the chief of the departments much early in our careers. So we also realized that in a complex world, you need to be very comfortable saying that I don't know, and then reach out and seek out help. So um, we have we went to a lot of people. We really got mentored with few of the people whom we really appreciate, and and that they helped. So every day, means I would say that was an help. There is something which helped us, be it in every field of business. Even if I'm an expert in finance, still reached out to people to help me on uh, accounting. I never done accounting in my life before. Accounting, company secretarial work, technology, be it analytics, be it hiring great people, be it about finding new opportunities, be it about the ideas which we want to bounce off to the people. So Pune is a very vibrant ecosystem out there, just like any other large city, which can help you. And where are once if you are looking for help, you will always find people who can help you. Like there is a saying that if you are on to something, the universe will conspire to make you succeed. So I believe any businesses or anything which we are building, if you want to really build it large, we should not be afraid of asking for help, because uh, the idea, it means you cannot do much alone. You will always need teams, cheerleaders, well-wishers throughout your journey. Even today, people who we took help from the initial part of our careers are still the ones whom we reach out for our mentorship. We still, even today, we go and spend time with our mentors to keep on looking at how can we really make 10x from here.
That is really thought-provoking. To raise a child, you need a village. And something like that we are creating at the Finance Story. We are coming up with a project called the Finance Mentor Box, where every viewer who is having any problems or any conundrums related to their startup journey or their career journey, they can get in touch with us and we can hook them up with a mentor who can help them and guide them. So, in 2015, you and Akshay raised 1.5 million US dollars, which is not a very big amount for a lending industry. But in 2017, you raised 4 million US dollars. What was the transition? What was the kind of pressure that was built in the span of 2 years? You had to raise so much money. So how did you go about this approach?
Yeah. So the financial services is a business, uh, you are always raising money purely because of the fact that, unlike any other businesses, in my business, money is the raw material. I raise money to lend money. So, I keep telling my team that, if somebody is giving me a loan, I can take it happily at 12 o'clock in the night also. For equity, it just takes little longer. We are in a business where the money is the raw material. We have constantly raised money. We will continue to raise more money as the need of the markets are, or need of the company will be. What is more critical is that how you are utilizing that money, or how you are making it work. If are you really making a business worthwhile, or is it going into something which is uh, not making sense? I'll not call it burn, because the burn is a part of the journey. If you are spending money which does not make sense, then there is any real trouble in the business model. Till the time the business models need money, um, and the money will always be available. That's the first thing. And the second piece is that, you just need to keep, yeah, ensuring that you have enough money all the time, so that the growth doesn't suffer. So we did raise 4 million in 2017. After 6 months, we went ahead and raised another 16 million. And as much as about a month back, we raised $110 million. So we continue to raise money purely because of the fact that it is something which we need as a raw material, because we need to go and leverage that money with loans on the top of it to give money to our consumers. That's a part of the game. Yes, whether we raised small money or the large money, it's all perception. Whatever is on that day, how I felt about the money, I raised that much, and it's lucky to whatever we have done till now.
So you mentioned that money will always be available. What kind of confidence is this? What, or do you have a theory behind saying that?
So when I say that, see, okay, so like there is a saying, I think Warren Buffett said that piece. He has not seen a profitable business ever going bankrupt. You know, so if you are building a business in a right way, money will always be available. Uh, it might take some little extra time. It might not come at the valuations which you set it out. It might come at a different valuations. But there, if the business is good, if business is profitable, or profitable is a right word for our businesses, but if the business makes sense, let me put it at a larger context. I think money will always come, because there is enough savings across the globe which is available. I have seen 2001, I have seen 2008. Uh, and I myself was a fund manager. Um, just because the markets were falling apart, but still we had money, and we funded the good companies which we thought that these are the good companies. Of course, the bar of investing in a bad times goes up significantly, and vice versa. But if you are a good company, if you cross that benchmark, you will always there is always a money available. I don't think we I that money is ever a question for a good business.
That's amazing to hear from you, sir. One more thing I wanted to ask, as a follow-up of this, when you said that doing business in a tricky time is sort of a challenge. So during the COVID times, when especially when your product is aiming at money for the people in the salary range of 20,000 to 50,000, what kind of help was easy early salary for these in these times, in the COVID times?
During COVID times, when the COVID started, I think we also become very cautious. We reduced our exposures. We were also watching out because it was a, I can't even say that it was a Six Sigma event. It was much bigger event than that. So we were also looking to find that how deep the uncertainty is, how deep the crisis is. And I think by April end or by the mid of May of 2020, we start getting a lot more clearer about how this is panning out and how we should start uh, uh, restarting the or not restarting, but how do we really start thinking about the businesses. And we were the first ones to start reopening the lines. We started reopening lines for the consumers very fast, and we started building our businesses because we started seeing the first sight of how the customers are behaving. When we started speaking to the consumers, the kind of a messaging which we were getting was quite positive. And we went back into the business much faster, purely because of the fact that we realized that the whatever we have done till before the pandemic is a very good portfolio, and we see less challenge, and that really helped early salary post COVID in the eyes of the market as well as in the eyes of the consumers as a company who has really built uh, a business in a right way. Uh, uh, in our mind, we always look at is that scale is paramount. We need to keep building scales, but our business's risk is very critical. So you just need to balance both of them. And pandemic 10 means as actually we was a catalyst for our business, and we really has started uh, uh, building our businesses much faster post pandemic.
Brilliant. Creating something out of a challenge and scaling even after that is a feat which is commendable. And as you mentioned that you have to scale and at the same time make sure that the business risks are mitigated. So what are some of the business risks that you've mitigated apart from the pandemic time, which are worth mentioning?
So I think we are in a business of risk. We are not in a business of selling something. We are in a business of managing risk, where we give 100 rupees to a consumer, and we might make 2-3% as a return on that money. So if one consumer goes bad, almost 30-40 customers or 50 customers will end up paying for him. So that's a kind of a risk which we manage. So I think the risk management simply in my mind comes from the culture. um, I could go about talking about the risk algorithms. I can talk about the way we have really looked at the data, the way we have really managed the customer insights, etc. But they are all the outcome of a single factor, that how as a company we think about risk. How do we really think about as a culture, that whether we talk risk in the same breath as we talk about scale. And that is what something early salary has demonstrated well into the markets, saying that we were able to think about risk much more holistically, which resulted into a very strong the scorecard models which we have built it over a period of time, whether it is a fraud analytics engines which we have built over a period of time, whether it is the agility and the understanding of the consumers which we have built. I would say that today the target segment which we offer, our and we operate, our understanding is very deep. We really understand how does this market works, and how does the events can create a risk for us. And so it is a very strong teams out there for the risk on the ground. But I think the risk culture is the something which has really worked well for us. And having said that, the risk doesn't mean saying no. Like you said very rightly, at some point in time, not doing things is the biggest risk. So we really embrace that thing. We live with risk every day. And in my mind, if you just manage your risk with open eyes, it's a great business. any business is good if till the time you understand the risk and you're managing it well.
Absolutely. But sir, one question. Um, do you think that being a CA helped you with factoring these risks and understanding and maybe creating a critical path which worked for your business? Or do you think that any finance professional would have the capabilities of doing this?
It's good to say that CA helped me. There is no doubt about it. I will not say that whether other professionals or financial professional would have not done it, because I have seen many good risk managers who came with a very strong finance background, but not a CA. So I think what does the CA? So I'll just talk about myself. I think what CA as well as my investment time at Bajaj helped me in really looking at the risk and return in a much more holistic way. Because when you are managing portfolios, as much as you want to make more money, you also want to ensure that the portfolio doesn't go bust. And That's the same philosophy which helped me in really looking at the lot of risk in a much different way. So I could say that I was fortunate to look at the risk in a not only in the risk in the businesses which comes because the customer default, but I had an ability to really look at the risk from a macro perspective, from a global geopolitical, and the various aspects which I dealt during my time at Bajaj. That also has evolved my thinking about how should you look at risk on a day-to-day basis. And I think with me and my risk teams, we were able to really chart out a much deeper understanding of the risk and build models which can really help us through the not through the COVID kind of a time, but help us through, let's say, a recession. So those are the few things which helped. And of course, CA is something which was a foundation of whatever I have done. While unfortunately the CAs are always seen as professionals with finance and the accounting background, but I think many of us has also evolved into business guys, and we have really built and understand the business really well. So um, the CA was really something which helped me a lot, not only in the company, but I can owe my entire career to this degree.
That's really nice to hear. So you mentioned that you would not give less credit to people from the other financial backgrounds because there are people who have successfully laid out businesses, and more and more finance guys are playing stronger roles in the startup universe and as venture capital financer. So do you think that it's the way to go for finance folks? It's a very drifted question, but I wanted to get your understanding on whether you see more CAs and finance folks playing a stronger role at startups and VCs.
So I have met a lot of CAs at many VC firms and many of the marquee VC funds. Rather, one of the investor who invested in us recently, the entire team is a CA. Okay, so I think whether you do a CA or an MBA, it all boils down to afterwards how do you really think about it and how do you really progress your lives. There are CEOs who are CAs. I know many of them. Similarly, there are many MBAs who might just be doing finance, right? So I don't think that that's a main point. Whether it is a finance, whether you are from a CA, whether you are from an MBA, I think whether you is working in startup has two three things which one has to realize. One is that working in startups gives you an ability to learn a lot of things. Like when I joined Bajaj, it was less than 100 employee company. I had really had an opportunity to work in so many fields which a grown-up organization will never offer. Rather, I think I always call myself fortunate that I ended up at a startup which was well funded from that standard being Bajaj at the back, but it taught me a lot. Similarly, like today at our company, there are so many finance professionals, including CAs. We have CAs in risk, we have CAs in underwriting, we have CAs in analytics, we have CAs, of course, in finance, and we have one CAs founder also. Um, so, mm, uh, so it is all about how much you can learn. So startups provides you a great field to learn. That's the one piece. As an employee, I always will recommend people to go and work with startups. The amount of learnings which you can have is immense. Uh, but also, in case you want to start a business, irrespective of your degrees, I think it is one of the best times in India to start a business. There is enough uh, ideas which can implement. India still needs to go through a big cycle to become a very large economy, and we can play a big part into it. Second is that uh, at this point in time, if you have an idea, the capital, if you have an idea and if you have a ability to build, money is not an issue. You will always able to raise money. There is enough. Whether we talk about, like, when we started, angel money was not a big thing. The VCs, there were very few VCs. But as if we look at today, there is so much people who would like to invest as an angel investors. There are enough venture capitalists who who wants to look at India as a dedicated portfolios, and so much money is available. And on the top, the government and any other regulations are very supportive to the startup world, and we are seeing a great companies coming out of India. So and in my mind, again, I'm quoting your line, not doing it is a risk, doing it is not a risk. Failures will taught you few things, success will taught you few more things, but not doing it will not going to taught any teach anything.
That's true. Sir, with the whole conversation with you, I found out that you are a person who has extreme optimism, especially when you mentioned that, you should not call burning money, because burning money is a process for a fintech company. Uh, I just wanted to ask you that, how do you bring the balance of thinking about losses, and not worrying so much about the bottom line? Or is my understanding about the bottom line a little different from what you've said?
So when I say burning money, so it is two connotations. One is that uh, are you burning money to build businesses, or are you burning money to just survive? Okay. So and every business is different. If you are in my business and if you are running losses, uh, it is very tough to scale the business, even if you are building a right business, purely because at the end of the day, you need money every day. And the lenders and the rating agencies will be very unkind to a loss-making businesses. But again, this is one of the businesses which we do, and that's why the profit metrics are very critical. But at an overall level, and I'm sure you are coming from the fact that many of the startups has shown a tremendous amount of cash burns over last 5 7 years while building their businesses, and many of them are now finding themselves unsustainable. So there, I think what matters is that how do you really look at your own businesses, whether you are in unit economics, or whether when you are acquiring a customer, whether that customer's lifetime value will be higher, not only on Excels, in real world is going to be higher, and which is predictable with a confidence, is a question which is there. And I think that's the single most element why many of the businesses are now finding it tough to raise next round of funds. To find it, they are finding it, they might find it more tougher, is the the metrics has changed. Because when you are building businesses, there are two elements which are there. One is that your core belief, what you want to build. So let's just take an example. Our core belief was that we will build a dominant position in the consumer mind, while ensuring that we build the products which they need, but ensuring that we make a sustainable business on from the in a very near term predictable future. And when I say near term, it is like 6 months, 12 months, 18 months, 24 months. It is not 5 years, 10 years that will become profitable after 10 years. So that was the kind of a core ethos which we had. Similarly, many businesses will have a core ethos saying that, okay, I want to acquire large set of customers, offer them education, and we'll make money on that. But that core ethos has to be very clear in the founder's mind. Then there is a second interesting thing which makes it very tricky, is the investor sentiments at that point in time. And many times in that sentiments, the metrics is change. So instead of chasing a profitability metrics, if you are chasing a GMV metric, uh, in few businesses, I think GMV matrices also make sense. It is not that it doesn't make sense. Like taken and or but it, if you track a single metric, the chance of you losing your money, shirt, everything is very high. But if you are tracking a broad-based KPIs and broad-based thinking, saying that how it will work and how you are going to become very successful in the when the markets turn bad, those are the things which matters a lot. And again, it is a cycle. The growth and the entire you can say the progress of the community, humankind comes in a cycle. So we go through optimism cycle. Yeah, today we are going through a what we call as funding winters, while the good companies are getting funded, and the other or everybody is getting asked the tough questions by the investors, ki why we should fund you. So that's a cycle which will always bring out the best of the companies ahead in the curve. And I believe that those are the things which any founder or any company should always keep it in mind, that burning money is fine till the time you believe that your cash flows or the what you are doing today is positive. If we go and sponsor IPL just because my competition has done an IPL sponsorship, sometimes it may backfire. Sometimes it may not backfire, but one has to take a real cognizance of the fact that how do you really build a sustainable business for yourself.
One of my mentors always used to tell me that mistake is not a mistake if you've mitigated them. So I think that speaks a lot about your business acumen when you say that you don't consider them as mistakes, you consider them as opportunities. One last question before we part, sir. It's related to your co-founder Akshay. How did you know that you wanted to partner with him and that he will be the kind of support that you required for this business?
So I know Akshay for almost 20 years now. We started our careers together. Uh, I was a finance guy, he was a marketing guy. So you can say we hit off very well. We used to, means like socially, we used to were friends, talk about a lot to each other, while we never worked together before that, but we had a lot of mutual respect for each other's skill sets. And when we started building, we also realized that both of us complement each other extremely well for each other's skill sets. And today, that's one of the biggest strengths both of us carry, that we understand, put together, we understand the entire game very well. And also, good thing about Akshay is that the energy levels are extremely high, which you need in a person who is driving the sales and the marketing and the narrative to the consumers. Whereas I bring the risk angle really well. So both of us, in that sense, were chalk and cheese, and we were always wanted to try something on our own.
That is great. So your ideology for Five has always been to evaluate, plan, and adapt. And I don't think any business that follows this mantra can go wrong. Thank you for being with us. Thank you for patiently answering all our questions and sharing some valuable insights for our viewers.
And thank you very much for having me.